Okay, good evening, everybody. Let's go ahead and get started. If you guys can hear my audio and see my screen in the chat box, just give me a little Y or yes there, just to let me know it's working. Awesome. Thank you, guys. Awesome. Well, let's go ahead and get started. Just want to welcome everybody here. I also want to give a shout out to those of you watching this in the recording. Want to say hello to you guys. Also want to extend a warm welcome to those that are new with us into the program. Excited that you guys would be here. Let's go ahead and go over our disclaimer. As always, I need to remind you about the risks involved in this market. You can lose all or more than your initial investment if you're not careful. So please be aware of how many pips you're risking on each trade, in addition to how big your lot size is and ultimately how that would affect your account if you were to lose money. So make sure that you're going through that process each and every time that you take a trade. All right, guys. So let's talk COT report this week. I've done a couple of things that I think you guys are going to like. I'm trying to think about the best way to go about doing this. I think I'll do if you get so I've got a lot of new folks here, and I've also got a lot of seasoned, veterans in my program. So I think I'll do a shortened version of kind of how the strategy works and what we've currently been doing. Probably take about 10 or 15 minutes on that. And then what I'd like to do is spend the rest of the time going over my back testing that I did this week on a couple of things that I think you guys are going to like. We are going to make a little bit of an adjustment next week when we take the next batch of signals, and I'll show you what that adjustment looks like based off of, again, my back testing. And I am currently working on some other back testing that will be launched in the future weeks as I get more results. And we're going to have some other ways you can trade, alternative ways you can trade the COT report that are very effective. But as far as taking the six COT report trades each week, that will continue to happen. Per usual, we're just going to do it slightly different, and you'll see that here in just a minute. But before I jump into that stuff, and I know a lot of you guys are here for that purpose, we will get into that in just a moment. But I do need to kind of give a general rundown of what the COT report strategy is, and then we'll jump into that part of it. Okay. So first of all, let's talk about what the COT report is. So the CFTC COT report is a publication that the Commodities Futures Trading Commission, or CFTC, releases every week. Okay. And the CFTC is a financial regulatory authority here in the United States. And what they do is they regulate the commodities and futures market. They will make sure that there's not a lot of funny business. They make sure everything's ethical and happens appropriately according to their rules and standards. Okay. Now, one of the things that they do is the publication, the COT report that comes out every Friday, is it tells us how many positions, or rather how big of positions, the banks have been buying that are listed on the CFTC records. So these are different participants or institutions that are associated with the CFTC, and they are required every week to basically shout out from the rooftops. They tell them like, "Hey, we have this many euros, we have this many pounds, we have this many yen," and so on. And it's very valuable information because these are people who are generally pretty good at trading. They're not perfect, but they are pretty good at trading. And it gives us a more macro view of where the market will be heading in the future. And so we have a unique opportunity to follow them and take positions in the direction that they are taking through this report. Now, it comes out once a week, so you're not getting it every day. So it's not something you'd use as a scalp trade. It's not something you'd use as a way to just jump into a trade, in an afternoon. It is very much a macro view of the market in terms of taking a trade over a week or over a month or even several months sometimes. Okay, so the CFTC COT report can be found here on their homepage. You just go up here to market data and economic analysis. You click on commitment of traders, which stands for COT. And they have a lot of different COT reports. So there's not just one single COT report. The one we look at is this one right here. It's called the Financial Futures Report. So we're actually technically looking at the futures contracts, not necessarily Forex, but it's very useful in terms of taking Forex trades. So you click on this right here, and it's kind of confusing because there's a lot of numbers on here. But basically, the report, it looks like this, and it has the most recent date up here as to when this data was collected. So it's always going to be dated to Tuesday. This was the last Tuesday it was collected. It was about 8 days ago. They're currently collecting data for this week, which will be published on Friday at 4 p.m. Eastern, when you can go ahead and take this and get new information. So this is on the Canadian, this first one at the top here is the Canadian dollar. And you'll notice there's different distinctions. You have dealer side, you have asset manager side, leveraged fund side, right? The side that we care about is leveraged funds. And we're also going to be introducing another side in just a little bit on a different report. I'll talk about that later. That's a different subject, but this is how we're currently doing it. So we're getting the long side and the short side. We're looking at leveraged funds. The reason why we look at leveraged funds, long story short, is because leveraged funds has to do with professional speculators. So these are institutions with the sole purpose of making money in the futures market and being simply right about their positions. They're trying to take trades with the sole purpose of just making money. That's it. That's who we want to align with, because we want that too, right? We want to make money. So we follow these guys. They have the long side and short side of the market, right? And so these are the number of contracts long, and these are the number of short contracts on the Canadian dollar futures, okay? And these are all just institutions that report to the CFTC. So this isn't all the Canadian dollars out there outstanding. This is just, as far as CFTC goes, this is what they have reporting, okay? So right now there's a large amount of traders going short on the Canadian dollar, and that's their current stance, is to short the Canadian dollar. Um, and so that's actually one of the things we've done this week, is we've actually gone against the Canadian dollar this week. And was it last week too? I can't remember. Either way. So, and then this down here shows us the change. So it's the change in positions from the previous week. So you can see there's been a tremendous decrease in long positions, and there hasn't been a huge change as far as shorts go. There's just been a big change in long contracts, which is something interesting to look at. So we look at this information and we plug it into our journal, which is right here. So we go into this journal and we put in this, you can see right here with the Canadian dollar. Here's those two numbers we were just looking at. 22,000 contracts long versus the 41,000 contracts short. That comes directly from here. Okay, that's where we're getting that information. Now, when I want to search for a different currency pair, I just do a control F in here and I just search for, the euro. So if I type in EUR, that's going to pull up the euro. Here's the euro. And this shows me again, here's the long contracts, here's the short contracts on the euro. And then I put in the change. I take the change and I put that also here in the journal. Okay. The reason why we put it into the journal is because we need to make sense of this information, because it's just one thing to have data. It's another thing to make sense of it. So we have to make sense of it in here by giving us a percentage of how much is long, right? So for example, one of the most bought currencies right now is the pound. The British pound is very much bought by these institutions. The Japanese yen is very much sold off right now by these institutions. Again, just because they're buying right now or selling right now doesn't mean that immediately that means the pound yen is going to go up, because you've got buys on the pound and sells on the yen. It just means overall that is what they are buying, or have been buying at least. That's what they have been buying over time. Okay. And so we tend to want to take positions in the direction that they are going because of this information. And they're generally pretty good at what they do. Again, they're not always right, but overall they do make money. And so that's why we want to follow their general directions. And, when they head pivot one way, we want to go with them that way too. Okay. So what I do is I go in here and I get this information, and it tells me what percent long they are versus what percent short they are. Now, this is in the futures market. So in futures, they trade individual contracts. So you have individual futures contracts for individual currencies. Now in Forex, we trade pairs. So there's, Aussie against the yen, there's euro against the dollar, or there's the CAD against the franc. What we're trying to do is we're trying to figure out, okay, out of all 8 major currencies in the Forex world, which one is the strongest and which one is the weakest? That's all we're trying to do every single week. And that's with any strategy, by the way. That's just the basics. That's just the basics of the Forex world. You're just trying to find who's strong and who's weak, and then just trade that. That's what you're trying to do with Forex. It's the only market that I'm aware of that trades in pairs. Okay, well, I guess there's CFDs as well that trade in pairs, but yeah, Forex is traded in pairs, which is kind of interesting. So you're buying one currency and subsequently selling the other. So naturally, you want to find the strongest and pin it against the weakest, right? If you have two strong currencies, that one's kind of a toss up. If you're trading a strong currencies versus another strong currency, who knows who's going to win that battle? Or if you have a weak currency versus another weak currency, again, who knows? It's kind of a toss up. So the whole goal is to find the top strongest versus the top weakest. So what we do is we take every week the top, two strong ones or the top three weak ones or the top three bullish ones or the top 3 weak. It just depends on which side has more weak currencies and which one has more strong currencies. In the case of this week, there was only two really strong currencies, and last week or in this week there was three pretty weak currencies. So what we did is we just um, um, Roger, Miami versus Denver. Ouch. Any Denver Bronco fans here today? I'm sorry. Rest in peace. I'm sorry. That was rough. That's really good. I like that, Roger. Yeah, so what we do is we find our Denver Broncos, which would be over here. What's the weakest guy? Oh, it's the CAD this week or the yen. I guess either one's pretty weak. And then you try to find your Miami Dolphins, right? And you pin and which would be your pound or your franc. And you're pinning those together because subsequently one's strong and the other one's weak. So you pin them together and that's how you get your setup. Um, that's what we do every single week. Every single week, you're getting 6 trades. So in the previous webinar, we actually talked about the importance of having a set amount of trades that you're taking each week. The reason why we do that is because there is risk involved, right? Because some weeks you're going to get this wrong, right? We've actually had several weeks like this recently where we've just been flat wrong on a lot of trades. So that happens, and it is just the nature of the COT report where you're just going to get it flat wrong. And I'm still trying to find ways. I'm coming up with ways to filter some bad trades, but it's really hard to just filter out all the bad trades. It's going to require us to, in a way, change the strategy in a way that I'm not prepared to change it yet. And I need to get more back testing done on some other things before I'm ready to just completely overhaul the strategy into something different. And plus, I don't plan on doing that because at the moment, because the strategy does work. I know the last several weeks doesn't feel that way, but it does work. Um, last several weeks, I'm down like 4 or 5%. I think maybe on one account, I'm closer to 6% on the account. But those are um, um, but those are like it's important to realize like a 6% loss is not fun, but that happens to our pension plans and IRAs and 401ks all the time, right? And we forgive them. But it seems like in trading, we don't really forgive it because it's just like the most recent, because we're constantly taking new trades. And so we want results right away, right? It's the same thing. Like if you go to a job and you work a job, you want to make money every single day because like you go for 8 hours, 10 hours, 12 hours, whatever it is that you work, and you want to get paid, next Friday, right? That's the agreement, right? Well, the agreement with Forex is a little bit different, right? Some weeks you go to work and you crush it. You absolutely crush it. And I'm going to show you guys, hang on for this, because I'm going to show you there's some ways we're going to be able to really increase our winning weeks. I'm really excited to share what I've put together with you guys in just a moment. Um, there's so anyway, there's ways to really crush it. And then other weeks you're going to lose money, right? That's not the agreement with a job. You don't really go to work thinking like, okay, my boss might not only make me work today, but my boss might also take money from my bank account, right? That doesn't happen very much. I don't know of very many jobs where they take money from you. Um, not very many. It's mostly you work so that you can get a paycheck, right? Um, anyway, so okay, so that's what we do is every week we take 6 trades, and it's really important that we stick to that because if you overtrade and start adding more positions, like a lot of people have asked me if we're having a losing week, and should we re-enter into trades that close out by natural means? I don't think that's a smart idea to to close out of trades that are, I don't think that's a good idea to just, get out of, to re-jump into trades, because the whole point is to let whatever's going through the market kind of flush out, right? So you don't really want to, jump into new trades. I don't think that's a smart idea at all. Okay. So anyway, that's basically what we do every week is we get 6 trades. We take all 6 trades at the start of the week, and then we hold those trades until um Friday. Unless of course they hit stop losses and or they hit trailing stops, then we just let them close at their stop losses or their trailing stop. We just let that happen. Which does happen quite often. On winning weeks, it's pretty common to have, 4 trades, 5 trades, 6 trades. By the end of the week, you'll have all 6 of them, perhaps by Friday if it's been a winning week. But if it's a losing week, I've actually had several weeks where, you get to Friday and you don't even have any trades open because it was just a bloodbath, right? So so anyway, and those are normal, by the way. It's like, so I gotta make sure it's very clear that with any trading strategy, it does have losses. Obviously, we don't want those to continue very long. And I'm going to show you guys some things that I think will help us, that you'll really like. It'll help keep the losses down. We'll also be more profitable. And I've got some cool things that we're going to start doing that will really help. But we're not going to completely get rid of the losses anytime soon. That's definitely not going to happen. And if you need a strategy that never loses, this is not the place. I don't know of a place where you're going to get that. Um, but yes, you are looking for consistency, and that is what I believe the COT report can supply you with. There's just going to be a certain way we need to do this. So that brings me into some adjustments, some things. Unless, of course, real quickly, if you are new to this strategy, if you feel like you don't quite get it still, have no fear. I'm willing to take your questions right now. Additionally, we do have lots of resources that you can look at. We've got tons of webinars that you can watch that are more for the person who's brand new to the COT report. So if you feel like you need more training on what the COT report is, if you need to know how to place your stop loss, I even made a video that's on the basic training link on the site. There's a link on the member section that says basic training videos. I think it's the very last video that shows you actually how to take the COT report trades. So that's a great video to watch if you're brand new. And if you need to learn the strategy in more detail, I've got several other videos that basically go through every nuance and of how the strategy works and stuff like that. So, but yeah, let me know if you guys have questions that way, and I'd be more than happy to answer those questions. Okay, so here's what I've been doing. So a couple of things I've been doing this week. So first of all, let's talk about what happened on Monday. So on Monday, I took the trades, or I guess Sunday, I took the trades like normal. And then I did an analysis. We were down a little bit on Monday, and I did an analysis on a lot of our pairs, like the pound CAD, franc yen, pound Aussie, I think was another trade we took this week. Yeah, it was. And I looked at these pairs and I was like, okay, this is not what I'm looking for. This is not exactly the trading setup that it just does. It didn't look good. And I think that was a good decision. Like if you look at a lot of these, currency pairs like the pound CAD, I even said this morning, I don't know if you guys saw it on the Telegram group. I just said flat out, like this pair is going to keep going down. And so far that's been the case. Pound CAD, I expect to continue to drop until about this demand zone. I mean, it may go up a little bit. You may see some bounces to the upside, but overall, um, um, overall, the pound CAD is going to continue down this week. It is my expectation, at least. Okay. And so I saw this, and actually, let's pull up the weekend indicator so you guys can see the pound CAD here, which is one of the COT trades we took. Here it is, weekend. So that's the start of the weekend. So Monday we were down, and then I said, "Oh my gosh, this thing's just going to keep going down." So I said, "Let's get out. Let's just get out because this doesn't look good." Um, I was just going to keep going down. And that's been the case there. If you look at the pound Aussie, I believe, no, actually, this one's done okay, but it's not up by a lot. And then the pound yen has been down most of the week. I think the franc yen's been mostly down. Let's take a look real quick. Yeah, it's been down pretty much the whole week from here to here. And then my CAD franc, I believe, stopped out. Yeah, that one stopped out before I even. So on Monday, it actually just stopped out on its own. It just hit the stop. And then you have the what else is there? You've got the um what are some of the other trades we took this week? Aussie Frank short. Yeah, that was not a good one. Everything just didn't look good. Um, everything just didn't look, when I looked at the analysis and saw where the next supply zones were or where the next demand zones were on these COT trades, I just knew like, oh, okay, this is not. In fact, I wanted to send out price action trades in the exact opposite directions. We at least did that on the pound CAD. Um, we've been doing that. We've been shorting similar pairs like the pound dollar. We've been selling the NZD franc. We've been buying. So they're basically the same trades, just in the opposite direction of the COT report this week, because that's what price action's been telling us to do, and the sentiment has been telling us to do, right? So anyway, as I saw that, I was like, okay, you know what? I gotta just pull us out. So I'm glad we pulled out. It's just unfortunate that because you don't, the strategy is really important that we stick to it. So I need it. So I realized what we need to do is we need to make it so it's a little bit better when we have these losing periods, because we are going to continue to have them. I'm not saying like right away. I'm not expecting, I don't know what's going to happen next week. I don't know what's going to happen the week after, but we need to make the losing periods not as, um, they just can't be as rough, right? And then we need to make, and the other way to solve that too is having better winning periods too. Like when we're winning, it just needs to be a little bit better. So I've been thinking about doing this for a while, not just because of the last couple of weeks, but I've been thinking about like, how do I make this a better strategy? Like where are the variables we can control? Because there's a lot we can't control, right? So, and I like the idea. There's a lot of things we can, couple, I have a lot of thoughts, guys. So I'm sorry if I'm bouncing around, but we'll get to all my thoughts here. We got time, right? And I want to go in kind of order, but there's a lot of different ways you can trade the COT report. You have the way that everybody loves, which is just the 6 trades a week, which is fantastic. We're going to keep doing that, for the record. That is still going to continue to happen. So have no fear there. I'm going to keep doing that. We're going to continue to pass prop firm challenges doing that. It's a great system. We just need to improve it a little bit. The There's other ways you can trade it too. Like some people, what they do is they take the COT signals and they use it to help develop their price action signals. So if you know the banks are buying something like the pound yen or last week it was the NZD yen or whatever it is that we're buying or selling, you can use that information to help you make better decisions with your price action, right? If you have intel that's telling you that the banks are buying something or selling another thing, then obviously the COT report can help you do that. So some people don't even take the 6 trades a week. Some people just use this information to simply just help back up their other. It's like a secondary form of verification when they're taking their other normal trades throughout the week. So there's that way you can trade the COT report. Now, obviously, we need to really, because a lot of people do subscribe to the version of just simply taking the 6 trades a week and holding them until Friday. It's a lovely way to trade. It's an easy way to trade, right? We just need to make it a little bit better. That's all we got to do. So, the thing that I've been thinking about doing recently, I think I've talked about this before, is okay. So, when you look at these numbers up here, so with the current version of the strategy over the last, I think this is like 14 or 15 months, the strategy, even I know it sounds crazy, but even with the last 4 or 5 weeks of losses, no, not been five, it's just been 3 weeks or 4 weeks that we've been losing some money. It still has made over 7,638 pips in the last 14 or 15 months. So it's still averaged over 152 pips a week. Um, I know that sounds crazy with the most recent, taste in your mouth, but that it has done that nonetheless. Now, we're going to obviously improve this, but I just want to clarify that it's still been a profitable strategy in the much longer term. Now, a lot of you haven't had prop firm challenges to support that, or you've started prop firm challenges recently, or you've traded it in a live account or a demo recently, and you haven't really seen that kind of profit from the COT report. I get it. I'm the same way. Like I think I mentioned in the last webinar, I started a prop firm challenge in July. In July, I was down. It got down to 190. It was a 200K challenge. I took it from 200K down to 190. I got it up at one point back up to like 203 or 205. So I was actually profitable in August and part of September even. I got it as high, the equity at least got as high as actually the equity at one point because we had some good weeks that ended up poorly. Like midway through the week, they were profitable and then they ended poorly. Anyway, at one point, I got that account up to like 210 or 209, something like that. And now it's back down to 191 is where I'm at. So, and that's with the most recent losses. So I've definitely felt it too there. And it is frustrating because, it's just, like, what do you do? You're doing what you're supposed to be doing. You're taking the 6 trades. Like what's going on? Right. So anyway, one of the things that I've been thinking about adjusting because I was thinking about the variables we can control, like what can we control with the strategy and what can we not control? Well, I can't control what the market does. I also can't control what the banks buy and sell. Like they're going to give us information. The CFTC COT report is going to give us information every weekend, and I can't control what that information is going to be. It's going to be whatever they publish, and that's what we're going to go with because that's the strategy rules, right? So okay, I'm like, can't do that because that's out of my control. Can't control the market. That's out of my control. Okay, so what variables do I have? Well, I can control my lot size. I can control my stop loss. I can control my trailing stop. I can control my entry, like when I enter, and I can control my exit. And I'm probably missing a few, but those are at least some 5 variables that I can think of right now that I can control. Um, and I was thinking about like where's the one of those variables that people give me the most slack about. I get this on YouTube like every day. My phone blows up with comments on YouTube all the time. Like people who run it. I have a few COT report videos on YouTube, and people ask me all the time on YouTube. They're like, "What the heck?" They're like, "This COT report, it has huge stop losses. What are you doing?" It is a big stop loss. Like it is a big fat stop loss. But you have to keep in mind it's a week long stop loss. I think the stop loss, and this is what my theory going into this was, I think the stop loss is too big, and I think a lot of people have probably recognized that it is too big. It's a little bit of a too big, the stop loss is just a little bit too big for comfort, right? Because you're using a full average daily range. And not only that, but when you go to maytaf.com to get the average daily range, we're picking the biggest, fattest day of the week. So, like, if they give you an average daily range for every day of the week, Monday through Friday, and we're going with the biggest day of the week. So, if Wednesdays, let's say the pound yen has an average of 200 pips, and Mondays it's an average of 150, and then on Fridays the pound yen moves an average of 175. We're going to go with the 200 one because it's the biggest day of the week, right? And that's our stop loss for the full week is whatever the average daily range was for the biggest day of the week. That's the one we're going to do. And that's what we've done. That's what we've been doing. And these are the results so far over the last, 15 months. With this version of the strategy is it's made over 7,600 pips during that period of time, right? But what's the downside to that? Well, during losing months, it's pretty damaging, right? Like July was not fun. This month has not been fun. I would say this month's been slightly worse than July. Now, June was great. August was good. May was good. In fact, I think those are the only 2 losing months I've had this year. There could be a few others, but this year has been pretty good, actually, generally speaking. At least the first half of this year was really, really good with the COT report. June was our best month, primarily. I remember May being great. April was great. And I believe all the other months this year were pretty good. But yeah, July was not fun, and this month has not been fun either. So again, I was thinking about what do we do? What controls do we have? And it comes down to the stop loss. Like, how can we decrease the stop loss? And it's been a touchy variable because when you're back testing, you have to test out, you have to figure out, okay, you have these different things you're looking at. So you're looking at, if I lower the stop loss, is that going to affect my winning trades? Because you're going to close out of a winning trade early, right? Um, or if you have losing trades that hit their stop loss, would they have hit their stop loss earlier? So you're basically trying to figure out, if you lower your stop loss, is that going to dig into your profitability, or is it going to help you more? I think most of us think lowering your stop loss would naturally help you make more money, which I think most of the time is true, but sometimes making a smaller stop loss could actually hurt your profitability, um, because you're having trades that are profitable stop out before they have a chance to actually make it, right? So that's this balance, right? You're trying to achieve a balance with the market. And when I'm back testing, I have to figure out, okay, when you look at this individual trade, um, would it have hit a stop loss sooner if I had used a smaller stop loss and then made money? So, I mean, it's just a lot of work. You have to go back and find out for each one. It's actually a lot of time that takes hours and hours. It takes whole afternoons, multiple of them, to figure that out. So it's a slow moving thing when you're back testing, because you have to maintain what you have, but then also make sure that you're not crossing lines that you think you're crossing, if that makes sense. Anyway, just a lot of stuff. So what I decided to do is I wanted to see what it would be like if I decrease the stop loss by 25%. So instead of doing a full 100% of an average daily range, I wanted to do 75% of an average daily range. And I felt like that was a good amount, because it's not like this extreme adjustment where you're going like half of the average daily range and making that your stop loss, because you'll definitely have tons of trades close out um, early at just a half an average daily range. So I wanted to see, what does three-quarters of an average daily range or 75% of an average daily range do? And my theory with this was, basically, if the market's going to go far enough to hit 75% of your average daily range, then it's most likely going to go far enough to hit 100% of your average daily range. So hear me out on that. So basically, the theory is, if a market's going to go against you, which happens obviously, if it's going to go 75% against you, what's the likelihood of it going against you for the rest of the week to that rest of the 25% to the stop loss? So let's say you have a 100 pip stop loss, it's the average daily range, and you get 75%, 75 pips in the hole on a trade. Okay. What's the chance of that trade turning profitable from being down 75 pips and then making money at that point, or the likelihood of it going all the way to the 100 pip stop loss? Turns out from my back testing that it's way more likely that it will continue to the stop loss. If it's already going that direction, the chances of it turning around are very little. In fact, when I back tested this, I found very few circumstances where the market went um, past the 75% of the average daily range and actually came back up. It happened, honestly, just a handful of times. Like, I probably could count on like a hand, like less than 5 times, where that actually happened. It was very, very few. The vast majority of the time, when a trade's going to go to its stop loss, 75% of its stop loss, it would also go to the full 100% of the stop loss. So I hope that makes sense. Again, so the example I gave was, if you have a 100 pip stop loss, that's normal with the normal strategy, the normal version, and you cut that down to 75%, so 75 pips. If the market gets to 75 pips, by let's say Wednesday, the chances of it going to 100 pips of loss is is nearly 100% chance that it'll do that. Just because if the market's willing to go against you that far, then the chance of it going just that little extra is almost yeah, it's very likely. Let's put it that way. So that's what I found. So I wanted to figure out how much money we were losing by letting it go that extra 25%. So currently, so this is where we're at right now. So with the current strategy, and these trades are closed for the week, so everything's updated. So it's made 7,638 pips in the last 15 months. We've made 18,144 pips, but we've had a gross loss of 10,506 pips in the last um, but we've made 10 or excuse me, we've lost this much. So there's been a lot of loss. It's still net profitable, but even with those losses. Now, here's what's interesting. Through my back test, I'm going to show you guys this now. So remember, this is our net profit right here, 7,638 pips. If we change that to 75% of the stop loss, it ends up making 9,479 pips instead, which I believe, let's see, let me do the math on that real quickly. So that's 9,479. It's 14,9, it's almost 1,500 pips. It's almost exactly 1,500 pips. So you would save 1,500 pips by cutting your losses a little bit shorter each week to 75% of the average daily range. Okay. Which comes out to be a little bit more than a 20% overall gain. So the strategy is 20.29% more profitable. So that's the number right there. If you cut the losses a little bit shorter. Okay. Um, yes, that would actually save you quite a bit right there. Now, a couple of things with this. So I'm highly convinced that this is what I want to do going forward. There's actually one more thing that we're going to change here that you guys are going to see in just a minute with the strategy that I think will help us. But another thing that's really cool, guys, that puts our average weekly over the last 15 months at 173 pips per week instead of the 152 that we're at right now. So we've had several losing weeks that have caused that average to go down. But if you change the stop loss to just 75% of the average daily range, you end up getting 173 pips each week instead. It increases your profitability by 20% over the last year, a little over a year from my back test. The other cool thing too, when you look at this, so it only affected, like I said, about 5 profitable trades. Actually, I think it was less than that. That trades that went down that far and ended up coming back and being profitable. So there were very few casualties in that process of lowering the stop loss. Very few casualties. It was mostly just you were mostly just sweeping up shop. You're just cutting fat off of the stop loss. That's all you're doing. Honestly, we should have made this decision a long time ago. The strategy has worked. I know September's been rough, and I know July was a little bit rough. August's been good, June was good, and everything before that was really good. I honestly have been reluctant to change it because it has been good. I know recently it hasn't been, but I have been reluctant to change it because why would you change anything that's working, right? That honestly, my honest to gosh, like reasoning for not changing anything was because it was working very, very well. We just have run into a weak spot, and there's been some change ups in the markets. There's been some interesting things that have happened to the interest rates recently. Jerome Powell at Jackson Hole last week said some interesting things that I think threw off a lot of plans with the banks. I think oil, there's been some crazy things that have happened to oil recently, some adjustments that way that I don't think everybody was positioned for, including the banks, and that threw off the COT report. It's plain and simple. It just threw off the COT report, and that's kind of what that's what you're experiencing right now. Okay. Okay. So what does this do now? Let's talk about just this change alone. So this is how we're going to be doing it next week. I'm going to be looking at where the and that's actually Wes, what you just mentioned there is what we're going to talk about next. But then there's another thing I want to get into in just a moment that I think you guys are going to like. But what does this do? What does this look like? Okay, because we're not filtering more trades here. Like you're not getting rid of losing trades. That's not something that's happening. What's happening is you're cutting your losers early, but that's not the only thing that happens. Okay. And this is what Wes just mentioned in the comment section that I wanted to get into. This is the other side effect. This is actually the main side effect. The main side effect is not cutting losers early. Why? Because the lot size calculator makes sure you're still going to lose a fixed amount of money, right? So that's not the main side effect. It would be if there's like some science to it, but like if you used a fixed amount lot size, then yes, you would lose less on losing weeks. But since you're using a lot size calculator, you're still losing the same amount of money on losing weeks. So where do you see the benefits of this? That's what Wes said. You're going to see an increased amount of money on winning weeks. Okay. So that's what you're going to see. The reason why this happens is think about it. Let's say you're trading. I'm just going to, I know you don't all do it this way, but let's just give you let me explain this with an example. Let's say you have $100,000 account and you're risking, you decide that you're going to risk 1% per trade. Okay. If you risk 1% per trade on $100,000 account, that's $1,000 per trade. And if you calculate your lot size calculator to risk exactly $1,000 per trade, it wouldn't matter if your stop loss is 1,000 pips or 10 pips because you're still risking $1,000 on that trade. So that's the variable that we're getting after right now. One second, guys, got to take a drink here. Okay, so that's the variable that we're trying to get to. So if you think about it, let me give you another example here. Let's say you take a trade on like the euro dollar, and normally that would have a week-long stop loss of 100 pips. Okay, now you're risking 75 pips on the exact same trade. You're still going the same direction. You haven't changed anything that way, but you're you're doing 75 pips instead of 100 pips. Okay. Because you're using the lot size calculator, you're still risking $1,000 on the trade, right? And then, um, if it were back to the old version where you're risking 100 pips, you're still risking $1,000 on the trade. And since on a losing week, if you were to hit your stop loss, on let's say you hit your 75 pip stop loss and you lose $1,000. Normally on that same week, if you were risking 100 pips, you'd still lose $1,000, right? So it really doesn't change the losing weeks. So there's a few things we're going to fix that problem here too. I'm going to show you how. So hold on for that part. But what this will mainly benefit is the winning weeks because of the lot size calculator. So I hope that makes sense. If not, watch the recording of this because I got to move on here, and come back and hear me out and say that again. Okay. So it'll affect the winning weeks. Why will it affect the winning weeks? Because if you were to risk 75 pips instead of 100 pips, what does that allow you to do when you do your lot size calculation? It allows your lot size to grow. It allows your lot size to be bigger because you're risking fewer pips. Okay, you're still risking the same amount of money, but you're risking fewer pips. So naturally, your lot size is bigger. So if you win that trade, what's going to happen? You make more dollars. Okay. You're going to make more money. It's going to be more lucrative on a winning week. So if we have a winning week, you are absolutely going to crush it. You're going to make a lot more money on the winning weeks. Well, to the tune of 20%. Well, a little over 20%, like we were talking about on average, is probably what you would be making on the winning weeks. So you're not going to see really a change on the losing weeks. You're still going to lose the same trades on the losing weeks. You're still going to lose the same amount of money on losing weeks. Except I'm going to make a change there too, which you'll see in just a second. But you're going to make more money on the winning trades. Okay. That's what you're going to see. Okay. Let me see your comments here. Let me see if I missed something. So Lee says, so it's a larger lot size, which means a higher profit. The losses would still be a fixed amount. Correct. Yes, it's exactly what we we're saying. Roger says precisely. You've got it. Professor Roger, exactly. Thank you. That's exactly what we're talking about. Yep. So, but that still presents us with another problem. Okay, so great, we make more money on the winning weeks, but what's the other problem? Well, we can't afford to have a month of losses like you can't like on a prop firm challenge, you can't afford I know we haven't done this in a month, like where you've lost 10% in a month, but you really don't want to even see a 5 or 6% loss. It still presents us with a problem, right? So what's the problem that we have to solve? Well, we have to solve how big those losses are, because we can't solve, because again, we solved profitability. We're going to have more profitability when the winning weeks come, which is great because we are due for some winning weeks here. I'm expecting October to be great. November historically has been great. So I'm expecting some winning weeks to come into play. When those come into play, yes, you are going to make more money. So we have to solve another problem, and which is, how do you lose less on the losing weeks? So really the only way to do this for now, and I have another thing that I'm going to do later, but is you need to lower your lot size. So instead of doing the 0.75% risk per trade, we need to consider, and again, you guys do what you do. Again, I can't really tell you what you're going to do. I'm going to tell you what I'm going to do. So since I'm going to be lowering my stop loss, that's going to make my winning weeks more profitable, but I want to make my losing weeks less of a loss. Okay, I don't want to lose as much on the losing weeks, and I think you guys are on the same page for sure on that. So what I'm going to do is I'm going to risk 0.5% per trade. And for some of you, if you're still feeling uncomfortable, there's nothing wrong with going down to like 0.25% per trade. You just won't make as much, but you could even do 0.25%. I'm going to do 0.5% per trade, down from my 0.75 to 0.5%. Now you might say, well, Steve, you're going to make less now. Not so fast, because we solved that other issue. How did we solve that other issue? We solved it through, because we lowered our stop loss, the unnecessary flubber, the unnecessary fat on the ends that we didn't actually need. We got rid of a lot of those losses so that we could have a bigger lot size anyway. So now I'm going to have a bigger lot size on the winning weeks, right? Even though I'm still risking 0.5% per trade, and that is less than the other weeks, I'm still risking 0.5%, and that is less, but my lot size just went up because I'm risking less per trade per pip. And that's where I get that on the other side when I go through that lot size calculation. And the lot size actually gets bigger because of it, because there's an inverse correlation between my lot size, or my between my lot size and my pips, right? So if my pips go down, my lot size go up. If my pips go up, my lot size go down. So I'm getting a bigger lot size naturally, right? So I'm going to get more money on the winning weeks. And then if I do 0.5% per trade, that means the most I'm risking in a week, it used to be 4.5% per trade, or per week. Now it's just 3%. So the worst thing that could happen is if every trade went to heck, which could happen and will happen. There will be weeks like this, and we have had weeks like this. You'll lose, the uh, 3%. You'll lose 3%, approximately 3% at 0.5%. And again, maybe that's not for you. For some of you, that may not be the case. But for others, it might be, like if you're, and I can't, you'll probably want to have a conversation with me privately on this, just to, if depending on where you are. If you like with mine, like I have a prop firm challenge that's down from 200K down to 191, so I'm down 4.5%. I'm totally cool going 0.5% per trade, because that's only 3% max risk, and that's assuming that I lose every single trade, which is not even as likely, but it could happen. 3% loss in a week. I'm okay with that. I'll take a 3% loss if I have to. It's definitely doable, especially if that means on the winning trades we'll make more money. It's totally cool. Totally cool. Okay. Um, so, and again, when it comes down to what lot size to use, we can have a private conversation about this. I can't really make a recommendation over this type of a webinar, but it is something to, like, feel free to reach out to me on that. If your account, like for me, I still have 5.5% to risk. So for me, I'm still good with the 0.5% per trade. But if I get down to, lower than that, I may need to go down to 0.25, right? On the COT report, funded account. I have other accounts for like sentiment strategies and price action. And they're doing their own thing, and it's different. But again, for the COT report, this is how I'm going to do it going forward, is 0.5% per trade on prop firms. I may increase that again back to 0.75. Honestly, I don't think I will, because, we've had because we haven't solved the issue of, and this is the next thing I'm going to go after. So we haven't solved the issue of filtering more trades. That's going to take more time. And I have some ideas, and I'm going to share you what those ideas are. That's my next plan of attack, is how to filter better trades. But right now, I'm totally cool to continue to trade with what I've got, as long as I do, a 0.5% per trade, and then I'll do a 75% of the stop loss. Now, you guys don't need to go do that. I already do that math for you on the weekend, so I'll just give you a new stop loss, and the stop loss will be a little bit less. Um, like you won't see the stop losses as big as they used to be, but they'll be, 25% smaller. That's what will get published out this weekend, and you guys will get that. And you can go ahead and take them like normal, but make sure you're going through that lot size calculation. For those of you that are brand new, I would just go with the 0.5% per trade. If you are down big on your prop firm account, and again, talk to me if you feel like you need to. There might be a conversation where we could talk about the pros and cons of a 0.5% to a 0.25% per trade, and decide which one is your best approach going forward. But eventually, I think, and this is just me, I think 0.5 is great. I think 0.5% is great, because that during losing weeks, you'll lose, anywhere between 0% and -3%, somewhere in between there is where you'll be. And on the winning weeks, like during the week of, during June, we had a 17% return on risking 0.75% per trade. So naturally, I think that would put us at like 12% return in just June, just doing a 0.5%. But actually, no, it'd still be more though, because you'd have the lower lot size. Yeah, so it may not affect your profitability. Like, you still could carry on like normal. That's what I'm saying. Like, it's just, the biggest effect is you're going to have the bigger lot. You're going to have a bigger profit when you're having winning weeks, and then the losing weeks, you're just losing less. That's really the big change that we're getting at. So that's really good. Okay, so now the next thing I'm going to solve, guys, and this is what I'm working on next, and I'm down to have you guys help me on this, is two things. The next thing I'm back testing and working on going forward with the COT report is I am trying to figure out if weeks of major news events, namely the FOMC meeting and the NFP, affects the trades. Okay, so I'm going to go back. This won't take me as long, and this may be even a change we make starting not this weekend, but the week after I'm done, where I go and check to see which, like an FOMC meeting. Okay. During FOMC meeting, is it better to close before the FOMC meeting, or is it better to close after? And I need to figure out like how much profit I'm missing out on some weeks that make money with FOMC, and the weeks where I lose money. Like last week, we were up big going into FOMC. And then after FOMC, everything turned around, right? That was on Wednesday, right? So last week would have been good, but maybe it's not the same for all the other weeks. But I just need to go back test, a year and a half to see if FOMC meetings really matter. And I need to get a variety of FOMC meetings, because not every FOMC meeting is created equal, as you guys know. So I just need to figure out, how that affects our trades overall. The other thing I want to find out is NFP, which is the first Friday of the month. So is it a good idea to close Thursday on NFP weeks, right? So that's the next thing that's going to be the easiest for me to back test, that will help filter trades. No, well, not filter trades, it will filter our exit, which is something we can control. Again, we're going back to the variables that we are in control of. And that is something that I can do. And it's something that's very mechanical, like, oh, it's an FOMC meeting week. Okay, close Wednesday in the morning. Oh, it's an NFP week, close Thursday night, right? That's an easy thing to do, and it can easily be accommodated by just me telling you when to close on those types of weeks. So that's what I'm working on next. The last thing that I'm doing to filter trades, and then and I'll see if feel free to put any more questions you guys have right now. But the last thing that I'm working on is I'm actually this is going to be a little bit more long term, but you guys know there's two different ways to trade the COT report. You have the leverage fund side, And there's also the non-commercial from the legacy reports on the Chicago Mercantile Exchange. Non-commercial is the closest thing to leveraged funds. It's just a slightly different report. What I want to do is try to get double verification from those two reports. So if I can side by side look at leveraged funds and on the other side have one for non-commercial, and if both of those line up, one says to buy the euro and the other one says to buy the euro, then we're definitely buying the euro. But if you've got something like where you have a mix up, like one says to buy the euro and the other one says to sell the euro, well, that one we just eliminate from the entire race, right? So that's another thing that I'm working on. That's going to take more time. That's a much bigger project, as you can imagine, because there's a lot more data to comb through and a lot more trades you have to look at and variations. So that's going to take more time. But I think this is a good start. I think this is a really good start for this weekend. So plan on risking when you go into your lot size calculator 0.5% or less, but it's up to you. And feel free to have a conversation with me if you need it. And I'm going to send out alerts with a slightly smaller, 25% smaller stop loss, and that will be a great adjustment going forward. So anyway, that's our plan, and I think it's a good plan going forward. And we've got some other things in the works that will be changed soon. Like I said, the NFP and FOMC meeting weeks might help us save a little bit more money. So. All right, guys. Well, I appreciate you. Thanks for listening to me for 2 hours. Wow, you guys are awesome. Appreciate it. So these recordings will be up here in the next hour or so if you guys want to review them. But thank you for coming. Have a fantastic rest of your evening, and we'll see you guys in the next webinar. Thank you.